Because the amendment bill, which received the Union Cabinet's nod last Friday, has been introduced in the Lok Sabha today, which allows 100% FDI in the sector and a lot more. Now, the bill will be up for a discussion at 4 p.m. this evening. Yash is joining in with more on this. Yash, tell us more.
Well, the bill, of course, will come up for discussion in the Parliament at 4, but we do have the details in terms of what has been proposed of that particular bill and some very important points coming out. The first and the most important, 100% FDI being proposed by the government in the insurance sector. If I just have to pick, does it do good, does it do bad? So it's negative for incumbent players, especially health insurance companies, because there's a possibility that new players, large players, foreign players might come in with their large capital, and the first choice is likely to be health insurance space. So that is one point. The second one is that the bill, empowers IRDAI to set limits on commission. This is a very important element which has been spoken about in the bill. This is negative for distributors in general and positive for insurance companies. The government has empowered IRDAI to set limits on commission, remuneration and rewards to insurance agents as well as intermediaries. Apart from that, the government has also said that it proposes that insurers should submit details of the expenses of management, publicly at regular intervals. The next one, IRDAI has been empowered to set investment regulations. This is positive for all insurance companies, but especially for life insurance companies. The government has proposed to give investment regulations to IRDAI, provided 50% of the total investment goes in government securities. This would include, of course, the central government and state government, and the balance 50% IRDAI will have the power to allow insurers to invest in the choice of their asset, of course, with the approval of IRDAI. This could be equity as well to increase the returns for insurance companies. For general insurance companies, 25% to be invested in central and state government securities. The balance, the IRDAI will have the liberty to give permission to general insurance companies to invest in different asset classes. The next one, insurance amendment bill will allow the merger of insurance companies into non-insurance companies. This is particularly positive for Max Financial Services because they've been trying to merge Max Life into them for a very long time. Of course, this is positive because this will lead to a simplification of the structure at Max Financial Services, also remove the holding company discount out of Max Financial Services. The next one is reduction in capital requirements for reinsurers to 1,000 crore as against 5,000 crore right now. This is negative for GICRE simply because capital requirements being reduced will bring more reinsurance players into the country, increasing the competition in the sector. Now, one very important element which seems to have been dropped between the consultation paper and the final bill which has been tabled is open architecture. Open architecture for individual agents would have allowed agents to tie up with more than one life, more than one general and more than one health insurance company. That seems to be taken out of the bill. Positive for LIC.
All right, Yash, many thanks for those details. But on that note, it is time for us to head into a short break. But more news and updates coming up on the other side. Stay tuned.